Introduction to Accounting and Finance. Hey everyone, welcome to this video on Introduction to Accounting and Finance. Here, we will guide you through the fundamentals of accounting and finance from start to finish. So, what is accounting? Accounting is the process of recording and processing information about economic entities related to businesses. Accounting covers a lot of ground, but on an individual level, it helps you identify your expenses you have done in the past month or year. Knowing where your money comes from and goes around helps you make informed decisions. Imagine a business without a record of its income and expenses. It's like driving without knowing where to go. For a business, accounting helps in figuring out what are best-selling products or services of the company or how much it costs them to produce those products. Investors and analysts use accounting information to decide on investments. Managers use the information to run their business, and creditors use it to decide on making loans. In short, accounting helps businesses to utilize money effectively. Above all, you will know how your competitors are doing through financial statements. Now, let's break down the difference between accounting and finance. Although they are closely related, they serve different purposes in the business world. Accounting is all about tracking, recording, and organizing financial data. It's like keeping a detailed scorecard of a business's money. On the other hand, finance takes that information and analyses trends, interprets risks, and develops strategies. It's like using the scorecard to make winning moves and plan for future success. In short, accounting looks at the past to keep records accurate, while finance looks ahead to make smart financial decisions. Now that you know the difference, let's talk about why accounting is important for every business. There are 4 main reasons. It keeps your business's finances in check through tracking income and expenses. It provides valuable insights on what's working in your business and identifies areas for improvement. It ensures your business stays legally safe by following tax and financial rules. It helps you derive your business growth by making smart financial decisions. Now, to truly understand accounting, you need to know its core elements. There are 5 elements of accounting, such as assets, liabilities, equity, revenue, expenses. Let's take a close look at each element. First of all, let's see what assets are. Assets are the resources controlled by the business. They can be things like cash, buildings, equipment, or inventory. In simple terms, anything a business owns that has value and can help generate revenue is considered an asset. Now, let's move on to liabilities. Liabilities are what a business owes to others. This includes loans, unpaid bills, rent, or salaries that need to be paid. If a company borrows money or buys something on credit, it becomes a liability until it is paid off. The next key element is equity. Equity is the value of assets that belong to the owners of the business. The accounting equation states that assets are equal to liabilities plus equity equation. You can find equity of a business by deducting the total liabilities from the total assets of the business. Equity equals assets minus liabilities. Next, we have revenue. Revenue is the money a business earns from its operations, such as sales of products or services. It represents the total income before any expenses are deducted. If the revenue is high, it means a business is performing better in terms of generating sales. Finally, we have expenses. Expenses are the costs a business has to pay to keep running smoothly. These include rent, salaries, utilities, and raw materials. In simple terms, expenses are the money spent to generate revenue. Now, let's discuss major types of accounting. Financial accounting deals with summarization and recording of various transactions to build financial statements. Management accounting involves identification, analysis, measurement, and interpretation of money-related transactions. Tax accounting is based on calculation of various taxes that a business has to pay. This accounting type deals with tax payment and tax return of the company, like maintenance of GST records, paying corporate taxes, etc. Credit accounting deals with the liabilities of the company. Lastly, cost accounting comes under management accounting and deals with the company costs, including production cost, etc. That's all for this introduction to accounting and finance. Keep watching to learn more about financial statements in accounting.